Trade deal seems a million miles away. Markets remain dull, and is Washington about to have a meltdown? What's up, everybody? Welcome aboard to Bubba's Bottom Line for Sunday, November the 24th. Wow. Well, again, we continue in this ridiculously slow, dull market grind, which is, really when you look at it, I mean, this is like summer trade in the middle of the fourth quarter. We do continue to grind higher, although last week was, a little bit of a down week, but, overall, markets remain dull. They continue to grind higher. That's really what we have. And again, you can listen to whatever you want. You can listen to all the stories and all the pundits wanting to continue to maintain bullish action. And again, look, we're long. So again, I'm not telling you anything that, that wouldn't benefit me. But at the end of the day, we continue to hear the same story. And of course, you've now got a new op-ed published by SocGen saying, well, it would be very hard for the S&P to support 3,400. Well, I mean, that's only another 10% higher from here. Okay. So again, I listen to some of these things that go on. I listen to very little news. I read a little bit just to see what's on others' minds so I can dispute it. And of course, that's what we're seeing. We're seeing the continued, we'll call it a melt up, I guess. And again, will it succeed? Well, hell if I know. I mean, look, one thing we know about markets, okay? The one good thing that John Maynard Keynes said, okay, because his economic policies are the worst, okay, but the one thing he did say was markets can remain irrational longer than you and I can remain solvent, which is, you couldn't say it any better than that, okay? So again, to say that you're smarter than the market, you're going to try to beat it here and figure it out that it's the end is ridiculous. Now, of course, you've got the genius, I think a Nobel winner or whatever, Pulitzer, who the hell knows, Paul Krugman, okay, who has been calling for the end of the world since Donald Trump got elected. That was only 10,000 points ago. So had you have followed his lead or many of the other economists, you would be bust by now, okay? So again, this is the issue and the problem with dealing with economists, okay? Because again, if you have no opinion, then your economist read could be fairly accurate, which does not mean you could forecast the exact standing of what the market's going to do, but it does mean that you're at least giving a straight look at what's going on in the economy, which very few do. The real problem is we have too many that want to throw their opinion in. Between Krugman and between David Stockman, who has been calling for the end of the world for forever, again, if you follow those guys, if you listen to those guys, you would be in the poorhouse, okay? Now, again, look, I'm not saying they're not smart guys, just like the Fed. I'm not saying they're not smart people, but they just have no clue, okay? They don't understand what goes on around the world. And right now, around the world, it doesn't matter the problems that we see. Right now, what we see is the markets continue to go higher. And it's really that simple. We can't focus on what they think, okay, or what they're telling us, because they're not telling you straight from the economy. Now, we have said this week after week for about the last, 6 or 7 weeks. I believe we're in the very early stage of recession. I believe that the next major move in the market will be down. However, that does not mean that we will not go up for the next 6 months, 6 days, 6 years. I have no idea. I know one thing for sure. The markets are never wrong. Okay, so that I know. So whatever the markets do, they do. Now, again, my only prediction is that we're going to have a major move, and the next major price move will be down. But again, that could be from here, from 10 points from here, from 10% from here, from 20%. I have no idea, nor do I want to try to tell you or guess what it is. I do know one thing, that we will continue to follow what we do and stay within the algorithms, because we will be in the best spot when things finally do change, and nobody knows when that will happen. Okay, but you want to talk about what some of the problems are. Okay, well, again, you've got a major outflow from the equity markets into fixed income. Now, again, what does that mean? Well, right now it doesn't mean anything, because again, you have to look at what the markets are doing before you can make a judgment. You can't count on what you think might be the proper fundamentals. It was the big story last week about Ray Dalio, okay, one of the best, hedge fund guys or whatever. And of course, they came out with the story they had bought $1 billion worth of put options, okay? And he came out and vehemently denied it on Friday, okay? Again, even if he did buy, why was he buying them? Just because somebody buys something like that, okay, we don't know what he was doing on the other side of the trade. If you remember, there is typically more than one side of the trade. So just because he might have bought them, okay, doesn't mean that the market's going to melt down. Now, again, you could see that because the markets did not melt down after that news hit the tape. So now, again, you always have to remember, no matter what news you hear, no matter what bull crap that's delivered out there, there's another side, okay? So let's not try to over-anticipate. Let's not try to figure out what the words mean because we know one thing, the media is full of crap. Okay, and they are trying to guide you. And first of all, their first job is what? To create listeners or watchers. Okay, so they can get ad revenue. Do you think they really care what goes on in your portfolio as long as they're getting ad dollars? Okay, so you can listen to all this crap and the stuff that's spewed out there, because what you're seeing is again just a bunch of stuff to kind of not necessarily mislead you, but certainly not to give you the proper guidance, but more to drive ratings for their stations. Okay, again, that's as old as the oldest game in town. Okay, is they want to continue to drive you in. Now you've got a whole bunch of things going on. You got China, which today looks like Japan did in 1989 before they melted down. And they have still not recovered from these idiotic programs that we're all using right now. And again, did we not learn from Japan in the first place that you can't continue to print money? I mean, what you've got in China is you've got an aging population, okay, and with a real estate bubble, okay, with a lot of issues that nobody wants to talk about. Okay, you want to talk about trade, you want to talk about this and that. You can't, you're not talking about the core of what's going on there, okay? We've talked about this for years and written about it for years, about the hidden cities and other things. This is not new. This should not be new to you. China's going to melt down, okay? There's no question it will melt down. Now, the question is what happens to the rest of the globe? And, of course, we're already seeing a lot of the major issues. But remember, markets are still markets. Markets are always right, and money is still flowing into the United States stock market. Okay, we can talk about the outflows. We can talk about the fixed income. We can talk about anything we want. But at the end of the day, the markets are still basically higher. We're right at once again all-time highs. So do we expect something to change? And again, the answer would be no. I mean, does it matter that there's $250 trillion of global debt? Okay. Can that money ever be paid back? The answer is no. That money will never be paid back. So what does it mean? What it more likely means is that there'll be more monetary easing. There'll be more programs out there to limit down the value of your currency and your dollar, okay, so that they can reduce that debt by the sheer numbers of dollars. Okay, I mean, again, it's a fancy way to say we've got to devalue everything because we can't pay it back. Okay. Now, again, why are we in this ridiculous situation with overwhelming debt? Well, again, you can blame your politicians. You can blame everybody who doesn't care and who believes in the ridiculous money printing policies that we have. Okay. You can blame the fiat currency system on this, of the ability to print money out of thin air and allow banks that don't have enough in reserve to continue to lend out, which is also creating new money, okay, and creating new dollars. Because again, if you're leveraging 10 to 1, you're creating 10 times more money. So it's a crock, and the debt will never be forgiven. But what will happen is there'll be this continued manipulation, and this may be the way it's going to be for a long time. Okay, again, you've seen it in Japan for 30 years now. So again, you'll see more than likely there'll be more government buying of equities and things like that just to support all this. It's not good. It's not healthy. But again, that's what we have. Right now we've got that overall view. Okay, of it doesn't matter. Okay, so you really just have to take a look at what is going on, and of course, again, the markets go up 8.5% year over year. They have done so for 150 years. We do still believe that the next big move will be down, but that doesn't mean we won't go up 10% or 20% before we get there. So let's not try to predict and forecast what's next. Let's let the market tell us what's next and trade from there. Let's invest from there. Remember, if you're hedging, you can always be invested. It doesn't matter because you are protected to a mathematical certainty of where you want to be. So the key is here is forget about all the bad news. Forget about everything that's going on and watch one thing. Watch the tape, watch the charts. The market will tell you. It's the same as, we look at some of the other products out there and you continue to hear about the trade wars and they're settled. No, they're not settled. Phase one is going to be done. No, but not. I doubt it ever gets done right now. I mean, the way things are looking, it doesn't look like it'll ever get done. Now, of course, that has created some major market moves through those little, either tweets or news items or rumors. But at the end of the day, do yourself a favor and watch the grain markets. The grain markets will tell you if there's going to be a deal. And the grain markets have not missed once on all these phony announcements at what's going on. So we're seeing some stuff that might create some interest in the grain markets because of what's going on in Brazil. Okay, and of course their corn prices are rising, and maybe that will bode well for us here. But in the meantime, based on recent price action, it doesn't mean anything. And that, just remember, okay, it's always about the tape and the price action and money, because at the end of the day, price determines what's going to happen next. All the news in the world, unless it's something that is totally unexpected. Again, like the terrorist attacks, I hate to always go back there, but that's, unless there's something totally out of character, totally unexpected, that nobody had any idea was going to happen, that's bad, that could create something before that. But until then, the markets look like they continue in dull, drifting higher. That's it. No volume, no volatility, no action, tough to trade, great for investors. That's what looks like to be the overall story. And again, I can give you 1,000 reasons why the market should go down, but there's only one reason it should go up, because that's what it's doing. This is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out here for a break, and we'll be back with more of Bubba's Bottom Line after the break. What's up, all? It is Thanksgiving week. How about that? A short week. And of course, on Black Friday, we'll be doing a special webinar of our micros and mini portfolio stuff, and they've been killing it, making new highs. So we're thrilled with that, and of course, want to share it with you and see what you'd like. If you'd like to register now, you can go to BUBBATrading.com and sign up for it. It's free, and you can get to see what we're doing. And certainly, would love to have you aboard. We'll have some special pricing as well. In the meantime, don't forget about our high school program. We continue to try to educate the youth of America, and so maybe the next generation, after I'm long gone, will at least understand how they're getting ripped off, okay? Instead of just going along with the program. So anyways, if you want to help us out, go to Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. Now let's get back to Bubba's Bottom Line with your host, me, Todd Bubba Horowitz. What's up? And welcome back to Bubba's Bottom Line. It is Todd Bubba Horowitz. It is Sunday, November the 25th. And of course, every week we review what happened last week in markets. And of course, it's so slow. They can take me off and they can embalm me as slow as the markets have been. And again, it was a slight down week, but not excitingly down. Okay. Not volume heavy down, not panic driven down. A market that was down just based on that, it was probably because it kept making new highs. You have to remember that at some point there will be what we call some mean reversion. And if you follow any of the stuff with the mean and mean reversion, the easiest thing is to watch the Bollinger Bands, okay? Just in case you want to understand what I'm talking about sometimes. And of course, the Bollinger Bands, they go up and down with the market, and they kind of wrap it around. You see these bands around it. But they do show you moves that are 2 standard deviations up or down. Okay, and typically there will be mean reversion. Now, mean reversion, the mean doesn't stay flat. The mean goes up with the markets going up, and it comes down. So even if you are at a place where you're overextended and you sell it, and you look to buy it back at the mean could be higher than where you sold it by the time it gets there. So again, it's something that you can use. It's something you can talk about. But remember, the markets will do what they do, and no matter how much we want to give it reasons why, it will do what it's going to do regardless. Okay, but understand that last week was probably just a little bit of a mean reversion, a very quiet, no panic in any of the sell-off. We had one little pop in the VIX or in volatility on Wednesday, but other than that, it was nothing. So we remain long. Okay, we are long across the board in equities. Now again, they're not going to change obviously today. They may not change tomorrow. I don't see them changing anytime soon, because again, the formula that we use, the proprietary algorithm, continues to keep us long the market, and it will until it doesn't. And right now, I don't see that changing anytime soon. So we'll continue to stay long the equity markets and not worry about it. Again, I mean, there's no point to worry what happens. If it changes, I'll reverse. That's all. It's really that simple. Okay. Now, if you look at some of the other markets, and of course, you look at the gold markets. Now, I got a lot of flack for gold, okay, of saying that it's going lower. And again, listen, I write what I have, I write what I see, and I'm not interested in trying to curb fit or fit to other people's opinions. Okay? I have an opinion, but my opinion is based on math. It is based on our algorithm. It is based on what I can see. And what I can see in gold is it looked like early in the week it had a little bit of a chance to maybe make some bullish action, and it failed. So to me now, it looks like gold is going, again, significantly lower. Now, we're now using February gold, so the numbers will look a little higher, but I think 1450 in February gold, if that breaks, I think 1400 comes, okay? I mean, again, it breaks 1450, it's probably 1440, 20 to even. Bang, 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 bang. Again, it won't happen in one day, because you will still have, even in those markets, you have mean reversion, right? Markets get oversold, they get overbought, they do tend to retrace back towards the mean. So again, in the meantime, we are still short gold, and we'll stay there, and silver. Okay. Now, as we look at the oil markets, as you know, we are long oil, and I do hate it. I always hate being long oil. Don't ask me why. It's one of those personal vendettas, I guess, against the oil market. But in the meantime, oil came off the bottoms, okay, and spiked out, and is now breaking out. Now the question is 60 the next in place? Is this going to be a false breakout? It's a pretty solid trend right now over the last couple of weeks that have really held that 55 in play and pushed us now above 58. Okay, so we're still long oil, looking for possibly a run for 60 now. That would be the most logical next step, next resistance level that we'd be watching for. And then there's, of course, the bond markets, which have been tormenting and torches. We have now reversed in bonds. We are long bonds, okay, which means that we are convinced, well, we're not convinced, but the algorithm is convinced that interest rates are going back down again. Now, they have come up. If you haven't been paying attention, okay, bond futures, when bond futures go up, that means interest rates go down. Now, for weeks or months, bond futures were collapsing, okay, which means that short-term rates, or not short-term rates, but like mortgage rates, things were going higher. And you've seen that, of course, at the mortgage window. So now it looks like we're going to start to head lower again. It looks like the bond futures are going to start to rally again, which we should see some much lower yield. And I wouldn't be surprised to see the 10-year get back to 1.5%. But we are long now in the 30 years, and we'll see again. The 10 years we're still short, so we'll see how it plays out. But in the meantime, again, it's another product, and it doesn't matter what it is, why it is. It's another product that does trade based on mathematical circumstances, that does trade based on the footprints that are left in the chart, and does change on price and the money that's being around it. Again, it's that simple. So we don't have to get complicated. Is the Fed doing something? Is this doing something? Doesn't matter. Okay. Now, the dollar has been chopping, and of course the Fed has been doing their best work at trying to pound down on the dollar. We're still short the dollar. Okay. Looks like it may want to try to break to the upside again. I think the Fed's work. I guess they say the Fed's work is never done. And of course, the real problem is that the rest of the globe continues to lower their currencies and their values by putting out more money, which is forcing us to go down faster. Okay, now that's not healthy overall. But again, if they want to eliminate that $250 trillion, the $250 trillion of debt, if they want to continue to spend like drunken sailors, they're going to do stupid things, and this is stupid. Okay, this is just absolutely laughable that they continue to devalue the value of our own currency that we hold in our pocket. which is why it's hard to hold cash here, because your cash is depreciating while it's sitting in your wallet. Okay, but it is what it is, right? Now, the grain markets, they've been pretty ugly. You know, it's been not brutally ugly. Well, you know what? I'm going to say brutally ugly, only because it's been so slow and so dull that they've just kind of creeped lower. Okay. Now, I think you're in areas of corn and wheat. Corn and soybeans are trouble. Okay. Now they can hold here, and we can certainly find bottoms. I mean, you know, long term, we love the grains, right? You know, it's like I hate oil, I love the grains long term. But here, it looks like they still want to work their way lower, but we are pretty key levels in corn and beans. Wheat has been much stronger recently, and it looks like it's trying to break out to the top side of congestion and bust to do higher highs again. So we'll, excuse me. So we'll continue to watch. But again, right now, we are short grains across the board. Okay. And again, look, again, it's not my opinion, because you know I'd like to be long them and hold them, but it is what it is. And of course, if you're a farmer, producer, and you're holding, if you can store for free on your own farm, store. If you have to pay for storage, liquidate, get long the board if you want to own them. That's really, because if you're hedging it the way you should be, okay, the way that I teach it, then you should never have to worry about being out anyways. And of course, meats, we had cattle on feed on Friday. You know, I love the reports that come out on Friday at 2 o'clock. Markets are closed. They're not liquid. There's nothing going on. And they don't open again until Monday morning at 9:30 Eastern time. And of course, you know, how do you feel when you're a farmer and you get a real bearish report? And the report was, and I guess it was neutral bearish, but they had really clobbered feeder cattle on Friday. And of course, unfortunately, it tripped our algorithm short. Now, I'm not short yet because I can't get short until Monday, until tomorrow, okay, at 9:30 Eastern. I would suspect, based on the report, the lows are probably in now. They're probably going to bounce. So we'll see how it goes. I mean, I'll make the trade if that's what's going to be, but that's what's going on. And of course, in live cattle, okay, or fat cattle we call it, that continues to run nicely. It was down a little bit on Friday, but nowhere near what feeders were. So again, we like the cattle markets. We're looking for a higher price there. And of course, hogs are under pressure. Okay. I mean, they're about ready to break down. Now they're coming to, you know, as you switch over to February, they're coming to some pretty key levels here. And again, look, we think hogs are going up longer term. But again, if you now listen to all the news, you know, there's all kinds of news about all the kills they had to make and all the stuff going on that should create higher prices for the hog market. It has not. So again, let's go back to the simple basics of markets. Price determines price, not the news, not somebody's opinion, not this guy, not that guy. Price determines everything. Okay, it comes down to price. Again, we can talk about I can give you the Asian swine flu. I can give you all the bad stuff that's going on in China. I can give you this. I can give you that. When it comes down to it, here's the price. This is what it is. That's it. There's nothing else. It can't be more simple than that. But of course, we like to make it a little more complicated. It's always about price. But at the end of the day, okay, whether you're in equities or whether you're in farming, you should always be hedged across the board on everything. Then nothing matters. Markets go up, you make money. Markets go down, you don't lose as much. You're protected. It's really that simple. In the meantime, this is Bubba's Bottom Line. I am Todd Bubba Orbs. We're going to step out of a break and come back with, of course, my commentary. And what pray tell can my commentary be today? What's up, everybody? Again, I want to remind you that obviously this is Thanksgiving week. It is going to be a slow week for trade, which is fine. Anything can happen. Of course, the markets will be thin. And of course, we're going to be doing our Black Friday webinar on our micro and mini futures, because we have built a couple of small portfolios for those who want to get into the futures market, and for those who want to learn to trade it and to get their feet wet without taking the big risk. You can check it out. It's free. Just go to BubbaTrading.com and register. And of course, don't forget about our high school program at Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. This is Bubba's Bottom Line. Let's get back to it. Welcome back. And of course, it is Bubba's Bottom Line for Sunday, November the 25th, and it's always time for my commentary. And I opened up the show by asking if it was Washington ready to melt down. And I think you're going to see some very interesting things happening over the next couple of weeks, maybe a couple of months. But it looks to me like the whole Washington, as we know it, is going to have a major, major meltdown here. We are finding, throughout all this impeachment crap, okay, which is by far the biggest joke ever, okay? It's about as dumb as you can possibly see, okay? And it looks like Nancy Pelosi has lost her mind because, again, she's lost total control of the party. But in the meantime, okay, all of a sudden we're finding out all the things that have been done over the years. And again, I forgive neither side of the aisle. Just let's be clear, okay? Both sides are a little bit snarky, right? Both sides are a little bit shady. And I think the reason you've never seen anybody ever investigated once they leave office is because whatever they did, the next person in line is worried about what they're going to do. But again, you always have to wonder and ask yourself, why would anybody spend $40 million of their own money to get elected to a $200,000 a year job? Okay. Besides the president of the United States, which is all about ego, okay, the other jobs, why would anybody want to waste their time, waste their money to get there? Well, obviously there's some more payoffs. I think we're going to start to see that, and I'm going to predict that there's going to be a major meltdown, and I think a lot of people are going to need lawyers, and I think a lot of people may be going to jail, including some very big names that you would have never thought would have been in that position. Because I think what's happening now is you're finding out some of the phony crap with these FISA warrants. I think you're finding out a lot of the stuff of what they've called over the years the deep state, which could never really be proven. Okay, Chavez tried to bring it out, but he's now no longer in office. But I think we're finally starting to possibly see, and some of these things will come out, that there is going to be some major issues. And like I said, I believe that you're going to have to see a lot of these people, very famous names, will be looking for attorneys. There's going to be a lot of, I think, no comment, Fifth Amendment rights. I don't want to incriminate myself. But I predict we are going to have some major issues in Washington. And I think you might see this structure. I think you see it might melt down from what's going to go on here, because it looks to me like we might have finally gotten to the bottom. I think this whole impeachment garbage and this Ukrainian thing, which is, I don't care what anybody says, there is nothing wrong with what was done with Ukraine. Okay. But again, I don't care. I don't want to get into a political debate, depending on what side you're on. I'm in the middle. Okay. And in the middle, I say, I don't see anything wrong with it. And Biden should have been investigated years ago. But of course, this is the whole thing. Many of those guys on both sides slipped through without investigation. In the meantime, look for a big shakeup. Look for something big to happen in the next couple of weeks. Maybe it'd be a Merry Christmas to Washington, D.C. In the meantime, everybody have a great Thanksgiving. We'll see you on here on tomorrow with Bubba's Daily Update, of course. But for those who don't get that, everybody have a great Thanksgiving. We'll see you next Sunday with another Bubba's Bottom Line. And of course, Sunday Night Football. We're cooking right now. All right, well, we're taking the Green Bay Packers, okay, against, okay, the San Francisco 49ers plus the 3. We're taking half on the plus the 3 and half on the money line. And I think Green Bay drills them a new one. Have a great day, everybody. Have a great weekend. This is Bubba's Bottom Line, Top Bob Horse. We'll see you tomorrow. Bubba's Daily Update next week with Bubba's Bottom Line. Have a great day, everybody. We'll see you.